Hello everyone, I am Pratap here. We are at lesson 2 examples video. It is about institutional supply and demand imbalances. And this theoretical lesson is already available at our NeoStock YouTube channel. If this is your first visit, please note we are providing complete free training on supply demand zone price action. You can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab Playlists. Here you can find the examples playlist and all the theoretical and some of the examples also available, that is supply demand zone price action course. And here you click on the view full playlist, then you get access to all the training lessons. Supply demand zone price action course. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. Now I am providing several examples related to several markets, including Forex, commodities, crypto, and indices and other equity charts. So this is the lesson 2, institutional supply and demand imbalances, and using this how we can identify demand and supply zones. And I already explained in detail. I request you first complete this training lesson and then you get into examples video. Okay, let me summarize what we already learned in this lesson 2, a quick summary. In lesson 2, you learned prices moves within a narrow range. When it happens, when demand and supply are almost equal. And that is called price is in balance. That means price is moving in a balanced way, in a narrow range. And the balanced price suddenly moves up or moves down. That is called imbalance. Why this imbalance is taking place? Either demand exceeds the supply or supply exceeds the demand. And what is the reason for this imbalance? So imbalance confirms institutional participation is happened. This is a very key point. That means imbalance is a clue for the confirmation of institutional participation. How institutions participated on the charts, I will be providing you the examples. And because institutional participation is there, demand exceeds the supply or the otherwise, supply exceeds the demand. One of the things might have happened depending on the price move. Either upside means demand exceeds the supply, downside means imbalance, downside means supply exceeds the demand. That is mainly because of institutional participation. And due to this reason, you may find, or the imbalance confirms, institutional unfilled buy orders within the balanced area if the price moves up. And the balanced area is called demand zone because initially price moved in a narrow range. That is called balance. That balanced area is called demand zone. How to make use of this demand zone, you will understand in the upcoming lessons. And similarly, imbalance can also confirm institutional unfilled sell orders within the balanced area if the price moves down. And the balanced area is called as supply zone. So within that supply zone, you might be finding institutional sell orders. If it is the demand zone, you will be finding institutional buy orders. What kind of buy or sell orders? Unfilled buy or sell orders. Unfilled means the orders are not yet consumed. So orders are placed, they are available. Okay, the name of this entire concept, this entire course, whatever you are learning because of this institutional balance or imbalances, the name of the entire concept is known as supply demand zone price action based on institutional imbalances. That's why institutional imbalances is a very key to understand. If you can understand this key point, the rest of your training course will be very simple. Okay, I will show you more examples, then you will understand what exactly the meaning of institution price is imbalance or price imbalance. Okay, now let's get into the examples. Okay, first I've opened Euro US dollar. This is a Forex chart. Did you notice here? Prices moved in a narrow range initially here. After that, what happened? You have seen an imbalance you have seen here in this candle. Imbalance means it is not balanced. Earlier price moved in a balanced, that means in a narrow range they moved, and all of a sudden prices started moving down, moving down, moving down. And this imbalance confirms there is an institutional participation. That means the institution might have placed huge orders in this area. And those orders exceeds the demand in this area. Now supply is more than the demand and pushed the prices down. And where institutional participation is available, inside this balanced area, they might have kept so many orders, sell orders, and the sell orders consumed all the demand in this area. That means consumed all the buy orders. Buy orders means demand, sell orders means supply. So that's why all the demand is consumed, no more demand, but supply is more here. Because there is no more demand, it pushed the prices down. Because supply is more in this area, supply is not consumed completely. That's why there could be so many unfilled orders. Unfilled orders means the orders that are not executed. Whatever the sell orders executed, they consumed the demand. And remaining sell orders, they remains within this area. And when they will be executed? Next time again prices entered into that area, and the sell orders in this area again pushes the prices down. So let me show you. Here let me draw a rectangle here. See, prices moved in a balanced way within this area. So this is price moved in a narrow range within this area. After that, it pushed the prices down. Why? Because this imbalance confirmed an institution participation in this area. How the institution participated in this area? By adding more sell orders in this area. That's why prices went down. And what all these sell orders did? They consumed the demand in this area and no more demand. But still there could be so many pending sell orders. That means unfilled sell orders. They are not executed. Why they are not executed completely? Because it consumed the existing demand and the remaining are not executed and no more demand, pushed the prices down. So this area is called as supply zone. What supply zone contains? Unfilled institution sell orders. A supply zone contains unfilled institutional sell orders. And when these unfilled sell orders will be executed, next time again prices entered into this area. See, prices entered in this area, again they pushed the prices, once again entered, once again it pushed the prices down, once again they entered, once again they pushed the prices down, once again they entered, and once again they pushed the prices down. But one day all the unfilled orders will be executed. That day the supply zone will be broken and prices will be going up. But at present, it might have provided you several trade opportunities. You might have got a lot of short trades here. This is the first opportunity here. This is the second opportunity. This is the third opportunity. Recently, this is the fourth opportunity. And similarly, did you observe here? Price moved in a balanced way in this area for about 2 candles. After that, did you notice? Imbalance took place here. Why imbalance took place here? Because this is the area, because moved in a balanced way. How they moved in the balanced way? Maybe like this. Because this is the balanced area. Now institutions added a lot of buy orders here. How can we say institution participated in this area? Because of this imbalance. The imbalance confirms the institutional participation. That's why prices moved up from this balanced area. Because it is moved up, we are confirming this balanced area as a demand zone. And this is the area institutional buy orders will be there. What kind of buy orders? Unfilled buy orders. Unfilled buy orders means the buy orders that are not yet executed. They are the pending orders. And next time prices again entered into this area, these unfilled buy orders again pushes the prices up. See here, it pushed the prices. Again prices came here. Once again it pushed the prices up. Once again it came here. The most recent time, this is the one. And once again it pushed the prices up. Here you got so many long opportunities. And here supply zone you got so many short opportunities. How many long opportunities you got? 1, 2 and 3. How many short opportunities you got? This is the first one. This is the second one. This is the third one. And this is the fourth one. See, you might have purchased, you might have short the prices, booked the profit, and again you took the long trade. And prices reached here. Here you would have booked the profit and again you would have gone for a short trade. Prices reached here. Here you would have booked the profit and again you would have gone for a long trade. Prices reached the target. Here you would have booked the profit. Again you would have taken a short trade and then again it reached the target. And here you would have booked the profit and also you would have taken again another long trade. See, prices moved up, reached the target. You would have booked your profit here. You would have taken a short trade. Probably you would have been in the trade now. Once they reaches here, again you will book the profit. See how these demand and supply zones are helping. They are helping us providing the long and short trades. And how do we know here we need to go for a long trade and short trade? Because we know here institutions are participated in this area. How we are confirming? By seeing this imbalance. Here there is an imbalance towards the upside. Here there is an imbalance towards the downside. Do every time they provide so many opportunities like this? Maybe or may not be. Sometimes you may take a trade and it might be your trade would have been violated. Sometimes it will happen. Well, you will learn all these reasons in the coming videos. Already theoretical videos I explained all those concepts. But you will be seeing more examples in all the markets. The main goal is to provide examples related to different markets like commodities, Forex, crypto, indices or equities. That is the main goal of these examples, because many people are asking whether can we apply this concept in Forex, can we apply in crypto, can we apply in commodities? Yes, in all the markets you can apply supply demand zone concepts. That's why I am showing you so many. See how well they worked in the Forex market. This concept provided several trade opportunities in the recent time. What way they provided? Because we identified institutional participations are there in this area. How we confirmed institutional participation? The key point is imbalance. The imbalance in the price. Here also the imbalance in the price. Earlier price moved in a narrow range, and all of a sudden imbalance happened from this narrow range. That's why we are confirming institution is participated in this area. That means the point you should understand, imbalance took place because of institutional participation. So they are called institutional footprints, these balanced areas. Imbalance is the confirmation for institutional participation. Imbalance is confirmation for institutional participation. But where institutional orders are available, they are available within this balanced area. That's why these balanced areas we are calling either demand zone or supply zone. If it is a red, imbalance is a red color candle, it is a supply zone. If the candle is green color candle, imbalance is a green color candle, it is a demand zone. Green color means prices are moving up. Red color means prices are moving down. In the previous video we learned this is the rally candle and this is the drop candle. These rally and drop candles confirms the imbalance, that indicates or that confirms institutional participation is there within these balanced areas. That is what I summarized in these points. That's why the name of this entire concept is supply demand zone price action based on institutional imbalances. The imbalance is the confirmation for institutional participation. This is the key point you should understand. See how well it worked. And let me go to Bitcoin, crypto example I will take. Did you notice here? Price moved in a balanced way here, and all of a sudden imbalance took place. Earlier prices moved in a balanced way within this area. And here imbalance took place. You may say here also some more extra further can we draw? Yes, we can draw like this. But better understanding I am drawing initially. But remember this is the balanced area and imbalance, this is the origin, actual origin continued in this. But okay, for our initial concepts point of view, this is the advanced level analysis. But our focus is on this candle. So that's why time being let me draw like this. Price moved within this area. This is the balanced area. And here imbalance took place. And after that prices entered. So it gave us a short trade opportunity. See how prices came down, 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 down. If you would have taken a go for a short trade here, how much profit we would have got? So much of profit it has given. So first of all, what is this? This imbalance confirmed. This is the area institutional participation took place. So institutional pending sell orders will be available. Pending technical terms unfilled. Unfilled sell orders are there in this area. Next time prices entered into this area, the unfilled sell orders are executed. They might have consumed the demand and again pushed the market down. So if you would have taken a trade here, we would have got a good profit. And let me show you another example, commodities market, gold. Have you noticed here imbalance and before that price moved in a balanced way in this area? And this is the balanced way it moved. Okay, balanced way it may move only one day, or it may move in 5 days or 6 days or 10 days or 20 days. That is a different story. How many days we should consider to confirm it is a strong balanced area or strong institutional order flows available. Everything you will learn in the upcoming lessons. Already explained in the theoretical videos. But now the main goal of this particular session is just identifying how to identify imbalances, how to identify the balances, so that we can identify the demand zone or supply zone, depending on the imbalance as upside or imbalance to the downside. We will identify upside it is demand zone, downside it is supply zone. Now what kind of zone it is? Because imbalance took place towards the upside, it is a demand zone. Where price moved in a balanced way here in a narrow range. Balanced way means there should be a narrow range. Here in a narrow range, a small candles or medium size candles. These medium size candles, we call it as base candles. All this terminology we discuss in the next videos. Okay, now our focus is the imbalance is the clue. Here there is an imbalance. It is the clue. What kind of clue it is? Institution participation is there. Where exactly the institution participation is there? In the balanced area. So this is the balanced area. All this balanced area, imbalanced area, we have technical terms that we will see in the next lessons. Now here our focus is only balance and imbalance. That's it. Because here we got a clue. Identifying that clue is important. What is the clue? Imbalance is the clue. What this clue is confirming? Institutional participation is there. That is the confirmation we got. Okay, where exactly the institutional participation is there? The balanced area is confirming. Imbalance is confirming, institution participation is there. And balanced area is confirming institutional unfilled orders are available in this area. See, gold, if you would have analyzed on the 1st of the August, then on 20th August, you got a long signal here. See, prices entered in this area, balanced area. See here, prices entered. And then the unfilled buy orders in this demand zone, because institutional unfilled buy orders are available here. Because earlier some of the institutional buy orders consumed all the supply in this area and pushed the prices, and remaining unfilled orders are available here. Next time again prices reached here, again it pushed the market. See, after that gold is just like flying. How much profit you would have got in gold? Huge profit you would have got. Who is the reason for getting this profit? Confirmation that there is an institutional participation is there in this area. By using this imbalance. That's why the topic is institutional imbalance, based on institutional imbalance. This is our topic. Entire course name is supply demand zone price action based on institutional imbalances. There are other supply demand zone concepts are there. We are not focusing on them. Our focus is only on the supply demand zone concepts based on institutional imbalances. Because institutional imbalances confirming institutional participation is there. If institutional participation is there, then only you will be having a strong unfilled orders in this area. See, the strong unfilled buy orders pushed the gold prices up. How much profit you would have got in gold? You would have got a trade on August 25th. Imagine you sold it on 1st, 3rd August or maybe today. How much profit you would have got? You just calculate. Okay, now let us look into another commodity, silver. Did you notice any institutional imbalances here? Yes, here we have seen an institutional imbalance. Earlier price moved in a narrow range. Yes, this is the area price moved in a narrow range. a small range. Let me draw. Sorry. See, this is the area. Price moved in a balanced way. And this imbalance all of a sudden confirmed. There is an institutional participation here. And when it is confirmed on 22nd August, then 27th August, again prices entered into this demand zone. Because imbalance confirmed, institutional participation is there, and where institutional unfilled orders are available in the balanced area, the narrow range area, institutional orders are available. Some of the orders are already executed, and there is no supply in this area. That's why in this imbalance confirmed, there is no supply here, only institutional pending orders are available, buy orders. Next time again prices reached here, the unfilled orders in this area again pushed the market up. See how silver is moving when you got the trade opportunity on 27th August. Next, how sharply silver moved. Just imagine how much profit you would have got in the silver. You can calculate and you can see how much profit you would have got. Just because of this demand zone. Who confirmed this demand zone? The imbalance. How it confirmed? There is an institutional participation. Where exactly? In the balanced area. Because in the balanced area, institutional placed several buy orders. Some of the buy orders consumed all the supply here. There is no more supply. And then it pushed the market up. And now the unfilled orders are left out here. There could be so many unfilled orders. When they will be executed, next time again prices entered into this area. And those unfilled orders or some of the unfilled orders executed, and there is no more supply, and now it pushed the prices again up. That way you would have got good profit. We have seen in all the charts we are seeing. Forex market we have seen profits. Commodity markets we have seen profits. Bitcoin we have seen in profits. And this is a US oil. See here we have a prices moved in a narrow range. That means in this area demand and supply are equal. Now all of a sudden we have seen an imbalance in the prices. Earlier prices are moving in a balanced way. Now all of a sudden we have seen imbalance. And this imbalance confirmed there is an institution participation in this area. Let me draw. Okay. It confirmed there is an institutional participation. That indicates there are institutional pending orders might be available here. What kind of pending orders? Unfilled buy orders. So next time again prices entered in this area, these unfilled pending orders again pushed the market up. And next time again came, probably the unfilled orders are not good enough to push the market. Now this time this zone is completely gone. That means consumed all the unfilled orders in this area. But before that already it gave a trade. Couple of opportunities. This is the first opportunity, second opportunity, third opportunity, or fourth last opportunity. Here good move we have seen. Right? And here this entire demand zone is gone. Now again we are seeing here, did you notice the prices moved in a balanced way? Now imbalance took place towards the downside. Now we can identify a supply zone in this area. So maybe next time prices entered in this area, we may get a short trade opportunities. And similarly, we have seen already euro, we will see Great Britain pound and excuse me. So did you notice here? Price moved in a balanced way and then all of a sudden imbalance took place within this area. Now you draw. Sorry. Price moved and again prices came here and again moved up, and this time this is completely gone. It gave you one trade opportunity. And even below also there is one more is available. Prices moved in a narrow range here and then imbalance took place and continued. And recently prices gave you a trade opportunity, long trade. Now you see prices are started moving up. And this is called as a demand zone because imbalance took place towards the upside. And also observe here, here price moved in a narrow range. This is again a very good example. This is a short trade opportunities. Price moved in a narrow range and here we have seen imbalance took place. And this imbalance confirmed there is an institutional participation. And what kind of imbalance we are seeing here? Prices move towards the downside. That means institutional unfilled sell orders will be available here. See, next time prices came here, it might have given you a short trade opportunity. See how much profit it would have given you. Very good, it pushed it down. Again prices moved up. Again it gave you another short trade opportunity. Again it came down at some extent. Some profit it gave you. And once again prices reached here, gave you another short trade opportunity. And again pushed the prices down. So how well they are working these institutional imbalances. Based on these imbalances, we are defining either demand zone or supply zone. And how well they are working? They are working very well in Forex market. We have seen they worked very well in crypto market. And we have seen they worked very well in the commodity market. We have seen gold, we have seen silver, we have seen crude oil. Okay, next one is USD, Japanese yen. See here prices moved in a narrow range in this area. Or maybe this is the best one. Because this is the first time it created here. Now you see. The imbalance. Prices reached here. Got a long trade and see how much push it has given. Again prices came down. In a small range they are giving, small profits they are giving. Earlier it gave a very good profit, now they are giving. But from where it is moving, after reaching to this demand zone, prices are moving. Why? Demand zone is having institutional unfilled buy orders, and which is pushing the prices up. And USD, Indian rupees. See here earlier, price moved in a imbalanced here within this area. See, price reached in this area and how it pushed the market down. Small extent, but again next time it gave you a very big push. And after that next time, it is not good enough. And it pushed and it is slightly violated. And next time, recent time, because it is already gone, easily prices moved up. But here we got trade opportunities. And what about in the demand side? Here, see, we have imbalance here. See, first time it gave you prices moved up and gave you an opportunity, again moved up, gave you a second opportunity, but slightly pierced, but that is okay. And then see how sharply now prices are moving. And next, let us look into NeoStock, the US indices. Now NeoStock is moving at an all-time high. The prices are at all-time high. So here price moved in a narrow range here. So first time it gave you an opportunity. Price moved in a narrow range. That means prices are moving in a balanced way. And all of a sudden institution participated here. How do we know institution participated? This imbalance confirmed there is an institutional participation. That means institutions kept a lot of buy orders in this area. This buy orders consumed all the sell orders and remaining pending buy orders left here. Next time prices reached here, see the buy orders, how it pushed the market down. A huge profit it would have given. I think it is slightly. Okay. So recently prices came very close to this institutional, but before reaching itself, it started moving up. Some more little below, if it would have reached, we would have got a good trade opportunity. and huge profit we would have got. Because we have seen recently they were just moving up, flying completely. And look into Nifty. See, here we have a price moved in a narrow range here. This is the area price moved in a narrow range. And this imbalance, see here, prices moved with gap down. These gaps concepts you will be learning in lesson 6. At the time we will discuss. But time being, remember. From this area, and recently prices entered into this area, almost close. Later on you will be learning some buffers and all concepts. At the time you will learn, just before also you will be taking. That way you would have got some trade opportunity. See how it pushed the market. And gaps also you will learn. Later on you will learn gaps will be having a lot of institutional pending orders, because prices are moving down, sell orders will be there. See from the gap area how it pushed the market down near to this supply zone. Why it is supply zone? Because prices are moving down from the balanced area. This imbalance confirmed prices are falling down. That's why we know that this is the area we have institutional unfilled sell orders will be available here. And those unfilled sell orders again pushed the market down. So this is how we will be using this demand and supply zone concepts. And this is how you will identify demand and supply zones. And the main clue here is institutional participation. How we are confirming institutional participation? Based on the imbalances, either towards the downside or upside. And within that confirms, within that balanced area, institutional buy orders or sell orders will be available depending on the demand zone or supply zone. Next time prices reaches to those areas, we get trade opportunities. And those trade opportunities will give us good profits. Hope you all understand the importance of imbalances, institutional imbalances. This is a very important lesson. I always say lesson 2 is my favorite lesson, because understanding institution participation, confirming institution participation based on the imbalances is a very critical step. Even before that, the balanced area we need to identify, where prices are moving in a balanced way. After that, the balance is changed to imbalance. That confirms institutional participation. Institution participated means there are so many unfilled institutional orders will be available. Those unfilled orders, next time prices reaches to that area, will give us trade opportunities. So this is the entire story behind why these unfilled orders are helping us in providing the trade opportunities. Okay, hope this practical session will help you understand the real meaning of institutional imbalances. Based on that, how we are identifying demand zones and supply zones. Of course, demand and supply zones, some more rules you need to learn, so that accurately we can draw the zones that you will be seeing in the next lesson. Okay, thank you all for attending this lesson. Let us all meet again in our next lesson. Have a good day.